On this episode of Don't Do That, Do This, we are talking about company restructuring and insolvency. So looking at companies that might be in distress and those red flags that companies can look out for. And we were with experts from Deloitte, Paul Leggett and Jennifer Frenis, both from within the turnaround and restructuring team. This is a really important podcast to listen to from a planning perspective and just avoiding any form of insolvency for your business. So please register your interest in all of our podcasts. We have over 25 episodes now for you to listen to, and you can download on your way to work or you can watch them on YouTube. So thank you for your support.
This podcast wouldn't have been possible without the following teams. Studio Red for their quality podcast studio and video production. And Sherbet Lemon for branding, social media design, and editing.
Jennifer and Paul, thank you so much for your time coming on to our podcast, Don't Do That, Do This. It feels timely to be talking about the topic area that we are today. And before we start, I would just love if you could give some background into your roles at Deloitte and then just give us some context as to how long you've been in Dubai as experts.
Hey, thanks. No, great. Thanks for inviting us. It's an exciting morning. So I'm Paul Leggett. I'm the partner that leads the turnaround and restructuring team for Deloitte Middle East. We have a team of around about 35 people spanning the UAE, Saudi, Qatar, working in all the other GCC countries. I've been in Dubai since 2011. I've been here 13 of the last 15 years. I took 2 years off to live in Barbados. I am a UK qualified insolvency practitioner. I also have licenses to practice insolvency in DIFC, ADGM, onshore UAE, as well as previously Barbados, and I still take appointments in the Cayman Islands.
Okay, thank you. And Jennifer?
Good morning. I've been in Dubai 8 years. In terms of my career, I have over 15 years of experience, predominantly working in insolvency, not just here, but also in the UK and Australia. I'm a director at Deloitte. I've been at Deloitte 4 years. Really focusing on insolvency matters here, which has been a really exciting experience actually here, particularly with the market, the way it's changing and evolving in that space.
Brilliant. So definitely experts on the topic, but for those that don't understand the full scope of insolvency, would you give me a definition that as a layman would be able to transfer that to a child?
That's how I look at the things. I guess, look, so combined with the time in the UK, I've been doing this for about 23 years now. And so I guess when we talk about turnaround, restructuring, insolvency, we're talking about the distressed and stressed end of the business life cycle. So insolvency is one extreme example that people will be familiar with when a company goes through a formal court-led insolvency process. But also we work with businesses prior to that. I would much rather be with a business that is showing signs of distress or stress and looking for early solutions, remedies to those problems. So this will be where businesses are forecasting or starting to be unable to meet their cash obligations. So unable to pay their suppliers on time, starting to slip on wage payments at the month end. It's a slippery, slidey slope. At first, the wages will be paid the last working day of the month. Then they slip into the last or the first Friday of the next month, and then they become 2 weeks delayed. Suppliers are paid to terms, and then they start to slip to 30 days in arrears, 60 days in arrears. So we're talking about those businesses that really are struggling to meet payments on time, either due to kind of operational distresses or through financial distress with over leverage. Maybe they've borrowed too much in the past, unable to service those debt levels once they start to mature and become due for repayment.
So I'm thinking about the chamber membership. So we're 60% owner-managed businesses, and then we have our UK PLCs, the universities, the chartered institutes. So probably in an owner-managed business, the founder would know early on because it might be their credit card that they're using in those situations. But who in the larger corporates, who is the person that will first notice there's an issue?
I would say the responsibility's on everybody. Often people say it should be one team or another. There's a big kind of trend in this region for the finance function to be marginalized and kind of blamed for all the failures. But I think, it's across the organization. This is why good companies have good governance and good boards to be able to spot these signs early, whether it's, again, the procurement team struggling to place orders because the suppliers are reluctant to fulfill them, given cash flow difficulties, whether it's, recurring HR issues, or obviously things in the finance team, checks being bounced, dishonored, unable to bring in the debtors and collect the receivables on time. So I believe it's everybody's responsibility, and these things should be picked up at the board level.
Yeah, for sure. And Jennifer, we talk about financial distress. So I'm just wondering, in practice, what does that mean for you when a company's coming to you saying, "Oh, we're in distress"? And as Paul's already said, it's not necessarily at the earliest stage, but when are they coming to Deloitte?
It depends. Ultimately, distress means that a business has run out of money, and there tends to be a number of reasons for that. In terms of kind of main drivers, it's normally a combination of internal and external factors. What we tend to find is that the root cause is internal, and due to that external factor, the stress is actually brought to the surface. In terms of kind of internal weaknesses, weak financial information is a common thing that we see. Also, poor cash flow forecasting, lack of governance, and also lack of challenge at the board level as well. A business might be profitable on paper, but ultimately, if it doesn't have reliable management accounts, doesn't have cash flow visibility, the problems really do become unnoticed. If you take, for example, a business that doesn't have reliable management accounts, they think that they've got a product line, for example, that's profitable. They continue investing in that. And months later, they find actually that it's unprofitable and it's draining cash from the business. In terms of the external factors, it could be a loss of a key customer, higher interest rates, a general downturn in the economy. And I was looking at a manufacturing business recently where they lost one of their key customers that equated to 40% of the revenue, but it still had the fixed costs to cover that couldn't be flexed, and it's now trading at a loss. So generally speaking, the external factor is the catalyst, and it does tend to then show that there may be underlying weaknesses of that business that test the resilience of the business.
And I think, just when do they come to Deloitte? Probably too late is the answer. There is a stigma around business failure, whether it's financial distress or insolvency, and I would like that stigma to be broken. There are reasons sometimes within people's control, but often outside of people's control, that lead to the business failures, as Jennifer just alluded to. If it's a loss of a key customer, then you just need to get help early on. And I don't expect businesses to have the skills necessarily within their own organizations to deal with stress and turnaround situations. That's not something you would hire for. And therefore, that's where we come in terms of being able to, all my team are specialists in that. So we can come in and help advise. And there is a tendency to, what's the right word? Ignore certain problems and just hope they will go away, and then even worse, take action that has short-term benefit but long-term negative consequences, just in order to collect that receivable. I just need to make the payroll. If you pay me 50% now, I'll let go of the rest. Well, that solves this week's problem. It creates twice as much problem the week after. And so actually being able to stand back and take a kind of more objective view of the problem and the solution, and kind of work with people who are used to doing it, certainly helps.
So it seems as though the initial hiring of those people, the trust, accountability in those roles is extremely critical. And on that note, hiring always feels like the biggest risk when it comes to the impact on cash flow and liquidity. So, we mentioned before potentially someone having to use their credit card to pay bills. I mean, this was something very real through COVID. So, we're years on, but still that muscle memory is still there from having, seeing companies that were in financial distress through something completely unpredictable. So what advice are you giving companies that are scaling quickly because, Dubai is a burgeoning business landscape, the, volumes are higher than ever. Companies are wanting to hire to meet those demands, but then at the back of the mind, there's that nervousness of an extra person is an extra visa. It's more healthcare. It's, potentially education. It's a big investment, but what do you advise companies in that sense when they're scaling?
I think it's great. And you allude to the point, the UAE, Dubai is just a thriving economy, and there's great opportunity to come here and make rapidly fast-growing businesses. The problem with fast-growing businesses, as anybody who's done kind of the business accounting will know, is you just create a massive working capital burden. Because as you scale up quickly, your costs are going to grow, as you mentioned, but also kind of your delayed working capital cycle is going to grow exponentially. The key is proper planning and making sure that you're forecasting this out, getting everything accurate, getting the right facilities in place. You should not be using your credit card to pay things. You should be using your overdraft facility or your kind of capital. And then another point Jennifer made, having the right management information to monitor your performance against that plan. And if you're going off plan, seek help or take corrective action, depending on the severity of the missing of the plan. But no, I think it's a great place to come and scale up, but just make sure you've planned in advance and proactively deal with the challenges instead of reactively dealing with them when you realize that you've overstretched yourself.
What's when you've seen, obviously in your experience with clients coming, are there trends of sectors that particularly come to you with those insolvency issues?
It does really depend. We have the family office, groups, which are quite prominent here. You can find that overall the picture looks merry, but in actual fact, one company within there may have been lending money to another one, so the cash flow looks okay. But actually, when you drill down and look at these entities on an individual by individual basis, you can see that some of those entities, or maybe one, may be under financial distress. So that's family offices. And the healthcare group, Paul was trustee of Emirates Hospital Group. That went through a successful restructuring. He was appointed bankruptcy trustee back in 2021. We went through the bankruptcy onshore law to make sure that the business effectively was kept, in place so that jobs were preserved, positive effect on the economy. So it really does depend. We have a whole array of companies that come to us from different industries.
And I think just on that point, so there is healthcare where there does need to be consolidation in the market just because there's so many players. And there is a lot of demand for healthcare services within the UAE and Dubai. But I think, at the moment, there's too many spread too thinly. And so you end up duplicating cost bases. And so there will be consolidation in that sector. The other one, which goes without saying, is obviously contracting or anything related to construction. Has always been a problem here in the UAE, simply because of, firstly, there's low barriers to entry. So almost everybody has a construction business of one type or another. And so the competition is fierce and the margins are very thin. You don't therefore need much in the way of stress at any point in the chain to have a huge ripple. And as soon as you get one construction site that stalls, the downstream effect across many, many companies of delayed payments then it just exacerbates this cycle across a number of suppliers. And then you end up with multiple stress situations. And so, without a doubt, construction within the UAE has seen a lot of kind of rocky times.
Yeah, definitely the supply chain and then shipping elements, and there's so many external factors, as you talked about before, that can affect the construction industry. Although it feels like every crane in the world is here in Dubai at the moment.
Oh, driving out here this morning, I'm not sure I've seen that many in a long time.
Yeah. Would you mind giving us a a live example, an example of a company that's come to you with, obviously we're not going to name names, but what is a typical example of a company that could come to you?
So, look, I mean, usually the referrals come to us less directly from companies. More, the way I would see the cycle working is the board or the management speak to their lawyers, and then their lawyers will recommend speaking to a professional restructuring advisor. When they come to us, it's typically, as I mentioned before, later than I would have liked. I have worked on cases in the past, very large cases for listed businesses, where they have come to me to say, our forecasts show that in 9 months' time, we're going to have a covenant breach, not even a cash breach. Therefore, we need to engage with our bankers, our lenders, the syndicates, in order to remedy and reset our covenants. That's absolutely great. Things can be fixed with that much lead time, and nobody will ever know that those companies even had a hint of distress. The flip side of that is when somebody comes to me on Christmas Eve and says, our payment due on the 31st of December of whatever it might be is going to be missed. What can you do? And I will say, well, I will do as much as I can, but it's a lot less than if you told me 3 months ago that you were going to miss the 31 December payment. So usually, as I say, it's people will come to us. They will have either already defaulted on a loan, or their payroll will be 1 or 2 months in arrears, or they will be telling me they're about to default within the next 24 days or week. I would love it if they came to me much sooner, because a lot of the solutions to these problems is around stakeholder management, and the longer you have to manage the stakeholders, to sit with all the various different parties, whether they're the shareholders themselves and looking at capital injections, whether it's the creditors and working out revised payments terms, or whether it's the banks and looking at what can be done around the servicing of the debt. Just the longer you have to discuss that with the stakeholders, the more successful those conversations will be.
Now, you mentioned lawyers and banks. So are those your two major stakeholders in your own kind of restructuring? Is there any other kind of professional services that comes in apart from yourselves? But
they will be the main ones that we deal with. Obviously, we have a large audit practice, and so we will also, our audit partners might come and say that they have a client who needs some, it might just be a conversation, it might be actual advice, it might be, a full-blown project. So we also get to see, referrals coming in through that way. And, it's great if our audit partners can, mention to their clients who, when they're doing the audit, they can start to see distress, can come and see us. But those would be the main three.
Yeah, it feels like that. When you were talking before, I was thinking, surely there's a point of tension before it gets to that point. So, you've got the audits that come through. So it just shows that within Deloitte, departments are speaking to one another, which is great. And within that as well, is there ever any resistance when you're speaking to and you're advising, denial being quite a strong emotion for people, and then a lack of accountability. But what are those kind of soft skills that you feel you kind of need to dig into to really kind of get the message across?
Yeah, restructuring is a journey, and the first place to start is with the company itself, the C-suite, the board, the owners. There is often a period of denial because, in the nicest possible way, everybody thinks that their business is the best business on the planet. So it's about taking people on the journey, and I think it's developing trust. I can point to 101 examples with people of where I've done it before, and to explain to them, it's the first time for you, but it's not the first time this has ever happened in the world or for us. And there is usually a path to seeing some form of turnaround and restructuring at the end of it. It's about patience. It's about, as I said, not doing knee-jerk reactions or things that in the short term damage the long term, and just really kind of building a great rapport. A lot of my friends within Dubai are CEOs, CFOs of businesses that I have helped in the past, and we just always stay in contact.
Great. No, that's obviously showing how strong the relationship is through that time. I mean, you're definitely helping people in a time of great distress, but also as a CFO, anyone around that boardroom is also so responsible for the entire workforce as well. So there's a huge pressure, I'm sure. And you're saying the knee-jerk reaction, but also that planning. It's a real melting pot of emotions. what we talked about sectors before, we talked about construction. We have a construction working group at the Chamber of Commerce, which is led by one of your colleagues, Cynthia Corby.
Yes.
It's probably in its maturity. We've seen a lot of companies that have established and then kind of coming back and forth from the market, and equally going to Saudi and coming back. And a lot of that is always down to being paid on time, whether how successful a company is in the region. So we talked about that whole payment cycle, but it may be an unfair question to ask, but whose responsibility is it to ensure that liquidity, or what could be done better to ensure that liquidity through the supply chain?
For me, it's around dialogue. It's about avoiding shocks. If you'll have customers that pay late, it's about proactively dealing with that, making sure you're in constant dialogue with them, understanding what the art of the possible and the impossible is. There is no point in agreeing a plan with somebody and then just wandering off and hoping that it happens. You've got to be constantly there, up with them, taking them along your journey as well.
I think also having the effective tools in place as well, such as, your cash flows, for example, 13-week cash flows, so that you can track your actuals against your budget, so that ultimately you can foresee potentially when you're going to miss that payment. And then if you've got that information in front of you, good financial information again, you can have an open conversation as to what the options are, and as Paul said, open dialogue as to how we're going to address that.
Yeah, and I think over 20 plus years, one of the first questions we always ask is, where is your 13-week cash flow? Because it's all very great showing me your 5-year business plan that shows this recovering and has a lot of speculation and things. The next 13 weeks, depending which business you're in, certainly in something like construction and contracting, everything that's going to happen in the next 13 weeks from a cash flow point of view has probably already happened in the past, and it's the materialization of the cash thereof, not forecasting what the growth rate in development's going to be in the next 10-year cycle.
So much of what you're saying related to business can be related to personal finances as well. And with more and more expats coming to the UAE from the UK, there's a rise, shall we say, in some of the financial distress cases in the British expat community. Many, especially young employees coming over and paying all the brunches, and they might be paying for rent that's a little bit out of there because they want to be near the marina. But so much of what you're saying through business is actually applicable for somebody that's themselves in financial distress. So what similarities can you see? We talked about kind of red flags, but if I was to ask you to kind of compare that for anybody listening that might be in that situation, where do they go as an individual? That they're not going to come for restructuring for a business, but do you know how people can reach out and get help individually? If you don't, you don't. But it's just a question.
I guess the one thing here is that because it's an expat community, the one thing I love is the openness, so that you can approach people, whether it be friends, to have a conversation around finances or life in general. But going back to kind of tracking spend, etc., it's very easy, isn't it? To your point, the sun is shining, to be spending money on brunches and whatever else here. But ultimately, it comes down to good financial planning and knowing what your income is and what your expenditure is.
And arguably, probably it's more than 13 weeks the need. But it's interesting, isn't it? From a business perspective, it's 13 weeks. Maybe individually, it's double that, I would say, in Dubai.
Yes, and I love the idea. With any form of distress or stress, whether it's personal or business, there is a tendency for people to get stuck within their own heads, to suddenly, start to close down, to think, I have to solve it all. I mean, you made the point in business that, I own this business, I am responsible for 300 employees. And whilst that may be true from a kind of governance and kind of director's duties point of view, it's also, it's a wider issue, and there's more people to support you. I think coming back to your problem, position of individual, if you talk to people, you may realize that A, you're not the only person going through it, and B, some of the ideas you have to solve it may be great, or they may be completely off the wall and crazy, and you just need somebody to tell you that before you do it.
Yeah. And just to sort of labour the point that you've said already related to business, but also for anybody listening, finding it a personal side, the earlier the intervention can take place, the better for that person or that business.
Yes, yeah. I mean, the sooner is always better. The shallower the hole, when the hole gets very deep, it's very difficult to climb back out.
Yeah. So recently we published an article through the British Chamber's weekly update, and the idea was that insolvency should be viewed as a strategic tool rather than last resort. So what is your advice for business leaders to really embrace that as a perspective earlier on in their business? Almost like people saying you need to plan for your exit immediately, so that you're always thinking 4 or 5 steps ahead. So what advice would you give for somebody that's really understands the importance of governance, but particularly to avoid insolvency?
It's certainly still viewed as a failure or an end point, and I do believe that it will take time to change that, perspective. As we've just discussed, acting early and insolvency isn't an endpoint. If you get to that point, it can be used as a strategic tool. The laws here, when I say relatively new, it's 10 years ago actually, the onshore bankruptcy law came here, but there have been various updates to that since the last being May 23. So it will take time to build that confidence and trust, but I do think it's real life examples such as KBBO Group and Emirates Hospital Group that will change that perception. They go through the law, they come out the other side successfully with a business that's been preserved, as I mentioned before, jobs are saved. It really should give confidence that there is a robust legal framework in play to be used. And I think it's been important as well for lenders. Ultimately, they put money in, they want an exit plan. So in terms of the secondary debt market, we've certainly seen more creditors lending here as well. You compare to the UK, where, for example, the insolvency laws there have been around for decades. They're well used, they're well understood. I do think that there can be improvement in acting early again and education. But again, that will take time, but there's certainly been some real positive steps. But I think overall, it needs to be viewed as not an endpoint, as a kind of strategic tool if you get to that point.
Yeah, look, I just mentioned, I came here in 2011, and having come from the UK, where actually, I don't want to correct Jennifer, but I think insolvency laws have been around for centuries, not decades.
Wow.
Go back to Dickens and Dickensian times.
Before my time.
One of the great tools in the insolvency toolkit is the ability to predict what will happen if nobody does anything. So it's what I'd refer to as contingency planning. To be able to go to the stakeholders and say, look, this is the solution we're putting forward. Okay, we're going to tweak it, we're going to negotiate it. But if none of us can reach an agreement, there is now an insolvency law. And if we invoke that insolvency law, this is the position we'll get to. If it's a liquidation, that might be a horrible result for everybody. It might be using the financial restructuring part of the law to force creditors or reluctant creditors, if there's sufficient onboard creditors. So it allows, again, that kind of stakeholder management and commercial negotiation to have more kind of depth, more teeth, to be able to actually say, that this will end at some point now, because we can't just have a zombie state company that goes on just until all the staff slowly drift away and everything's just abandoned. There is a way of closing this, and, let's try and reach a better position than that.
Okay. So you mentioned about the different legal frameworks. What do you anticipate coming to the region in the next few years that could support and enhance the experience and avoiding or managing better insolvency?
Yeah, so I think Jennifer mentioned the law was 2016. It's been revised since then. I am the only non-Emirati trustee on the onshore law. I think, that's given some great learning experiences. One of the exciting things about this region is their adaptability and ability to flex quickly. From having done the KBBO case under the onshore law, and for completeness, that's not the only case. There was JBF RAC went through the onshore law, and there's been a few big businesses that have used it. But it's great how the lawmakers then take on the lessons learned, and so it will constantly be tweaked and refined. The last update had a significant change in how creditors voted, which is a very positive step in terms of getting restructuring plans through using a formal legal route. All I can see is that things will just continue to get better as, the law is tested. Things don't work. Nobody ever expected the first draft of anything to be the perfect draft. But the way it's just, can be constantly changed and refined is brilliant. I think it's very exciting. And then, of course, you have the two main free zones in ADGM and DIFC, which also have their own insolvency frameworks, which are well tested and well trodden, which again, I keep on using the word insolvency. I introduce myself as an insolvency practitioner. If 95% of my cases never went to insolvency and all I had to do was the turnaround and restructuring, I would be incredibly happy. The insolvency bit is the kind of more extremely stressed and sad part at the end. But the more turnaround, the more restructuring there is, the better for everybody.
And that there's a huge amount of responsibility, particularly so I think in this region where you are a director in a company, you do have that responsibility. What advice would you give to somebody that's a director now that may be thinking, I need to do something before it gets too late?
Without sounding like a broken record this morning, act early, seek help, chat to a lawyer, get some, there's an interesting point. So I've been here as long as I've been here. I think I've only come across one case, and we're talking about serious situation, where directors have got independent legal advice. I just don't see that here in this country. So that there is going to a director to speak to a lawyer to say, this is the business's situation, what should the business do? There is also I'm a director, I have director's duties, what should I do? And that, as I say, I've only seen one board who have sought that in
all the time. Okay. So, it's very, very clear what the advice is. Is there anything else that you'd like to cover for anybody listening that is that you've either observed or that you predict for this region?
I think, it's going to be exciting times ahead, both from a law standpoint and from a business standpoint. There is going to be so much growth here. It's an exciting place to be. I will just reiterate the point over and over again. Get the right business monitoring tools in place. Make sure you're tracking your progress against your forecast. Make sure you know what your next 13 weeks cash looks like. If there is a problem, make sure you act early and just consult and speak to people. And it doesn't necessarily have to be the likes of myself. There will be other people within the business community who have gone through similar situations and may be able to just provide advice or guidance. And just remember, you're not alone. It's this being in a business that is struggling is not a unique situation. You look out and everything does look rosy and everybody's talking about double-digit growth and everything, but there will be many, many other people in the same situation.
Definitely, it's good advice. And because as the landscape grows, there's more competition. So even companies that have been established here for years will also be feeling that pinch a little bit as well, because it is a crowded market. That's why we're very proud to have many opportunities for networking and bringing companies and business owners together. So they, exactly what you're saying, they can talk to one another and have that kind of psychological safety to share where there might be an issue. And it's great to have the likes of Deloitte in our ecosystem for those companies to reach out to. So thank you so much for your time this morning. The messages are very, very clear. And if anybody wants to reach out to you individually, we'll make sure that your contact details are available after this podcast.
Brilliant. Thank you for inviting us.
Thanks.
Thank you.